Joining the program now is Marc Faber. He is the publisher of the Gloom, Doom, and Boom report. Marc, welcome to the show.
My pleasure.
So which is it, Gloom or Doom or Boom?
Well, depends on which asset class and on which region in the world, and also the time frame. We could have a boom first and then a bust, or a bust first and then a boom, who knows. But clearly markets will continue to fluctuate widely. I think that volatility will increase. And if we just look at the performance since 2009, the S&P has more than doubled. Thailand, the Philippines, Indonesia are up by more than 250%. And European markets reached 4 months ago lows that were equivalent to the 2009 lows or lower. In other words, S&P 666. So you have widely diverging performance in Asia. Also, some markets are up, as I said, 250%. And China peaked out at 6,000 in 2007, and we're now at 6,000 in 2007, and we're now at 2,000.
Yeah, so I just said Robert Prechter was just on, and he's he's saying that he thinks the markets have clearly topped out, but he's actually thinking the Dow is going to drop 90% in dollar terms, not in real terms like gold terms, but in dollar terms, because he thinks that the Fed is not going to be able to print enough money to hold off the deflationary forces. What do you think there's any chance he's right?
Well, my view is that one day there will be the final crisis when the system implodes and everything will collapse in value, because every inflation is followed by deflation. So in the last, say, 10 years, we didn't have very high consumer price inflation, although it was higher than what the Bureau of Labor Statistics published in terms of statistics. I would think that inflation for most people runs between 5 and 10% per annum. It's like your brother, he says, at $500,000 salary in New York City doesn't live a good life. He may be right. And so I think what they will do is continue to print money globally, all the central banks, and in real terms, the Dow is already down 80% against the price of gold. So I don't see the Dow now declining by 90%. But in 5 or 10 years' time, when the inflation in asset prices will have driven asset prices either higher or sidewards, I think we can have an implosion for a variety of reasons.
But an implosion from where we are now or from a higher level than where we are?
Well, that we'll have to see. My view was for the last few weeks that we made a top in stock markets and that we will go down a minimum of 20%. And then we will have to reappraise the situation in terms of how does the economy hold up, what are the earnings picture in terms of are they going to go down meaningfully, because this has been proven now by various publications and economists. The interventions with fiscal and monetary policies have not smoothened out economic activity but made it more volatile.
Do you think, if you look at the situation in the Eurozone versus the United States, which region do you think fundamentally, from an economic perspective, actually faces a bigger challenge? Is it more trouble? Is it Europe or the United States?
Well, the difference is that Spain and Greece can only print money to a very limited extent. To some extent they can, but very limited. Whereas the U.S. can endlessly print money, which could lead to severe dollar weakness over time. Now, for the next couple of months, I think the U.S. dollar will strengthen, not because anything is particularly favorable in the U.S., but we have even worse conditions in Europe. There's one point I'd like to make. and it's not necessarily my view. A lot of intelligent people, some with self-interest, some with less self-interest, they believe that natural gas and the increase in oil production in the U.S. is a game changer. I don't believe that it's such a huge game changer, but it could improve the trade deficit of the U.S., the current account deficit, and it could create kind of a dollar shortage in an environment in which the dollar would strengthen, and that would extend the lease of life of the U.S. government to borrow more and more money.
Well, I would agree that the fact that we have more oil and gas and we can export more is a net positive as opposed to where we would be if we didn't have the extra
Correct.
exports. But it is still not overshadowing. The trade deficit is still rising right now, despite the fact that we have the help of oil. The trade deficit is still growing.
Yes, and this is why I'm very skeptical about the game-changing nature of natural gas and of increased oil production. Look, I just came into New York 3 days ago. At immigration, I had to wait 2.5 hours to get through immigration. It took me 3 hours to get out of the airport. Do you think that natural gas and oil will change any of that? The U.S. suffers, like most Western democracies, from an oversized government bureaucracy. And, you know, people talk about easy monetary policies, expansionary fiscal policies. Yes, in theory, they could act as a stimulus for the economy, in theory. In practice, it doesn't work that way.
Yeah, and you know, Mark, when you think about all the money and time that we now waste on airport security, a decade ago or before 9/11, the economy didn't have to worry about absorbing that cost. All those, you know, so it's so much more difficult now for the U.S. economy to function because we're weighed down by so much useless regulation that costs money and wastes our time.
Precisely, and you are a businessman. You know how regulation makes it difficult for you to do anything. And all my friends who have small businesses in the U.S., they have maybe 20 employees, 30 employees. They themselves are independently well-to-do. They have no appetite whatsoever to hire anyone. They don't want to hire new people because they don't know what the regulation will be next year. And the business outlook is highly uncertain. The cost of doing business, they know, will only go up because the more they pay taxes to the government, the more the government has employees to bother them and give them a hard time with regulation.
Yeah, and the more employees they have, the more liability they have. The greater the chance that one of their employees is going to file a lawsuit.
Absolutely. But my point about Procter is, I think eventually the tsunami will come as a result of the unfunded liabilities in the United States, which is not talked about much, but is a real threat.
Well, we got a break coming up, you know, and Procter's basically saying the government's just going to default and not pay any of those liabilities. And we could talk about that. We got a commercial, but we'll continue with this on the other side of the break. We're talking to Marc Faber of the Gloom, Boom, and Doom report. More of this interview straight ahead, so don't go away.
But
The Peter Schiff Show. We now return to the Peter Schiff Show. Call in now, 855-4-SCHIFF. That's 855-472-4433. Rebel Radio, the Peter Schiff Show.
And we are talking live from New Orleans, Louisiana, with editor of the Gloom, Doom, and Boom report, Marc Faber. And earlier in the show, when I had Robert Procter on, and I brought up the topic of government's liabilities, its bonded liabilities and all of its unfunded liabilities, which both Procter and I agree are enormous and beyond the scope of the government's ability to legitimately repay. Robert thought that the government would simply default, that it would just stop sending out the Social Security checks, let the student loans go into default, and not honor its commitments. What do you think about the government? What is it going to do with its liabilities, both funded and unfunded? Is it going to default, or can they print?
I very much doubt that the default will happen for the time being, because as long as the U.S. can sustain essentially deficits of over $1 trillion and monetize, say, 60-70% of these deficits, they'll do that. Moreover, it should be understood that a very large portion of the Treasury debt is owned by institutions in the United States. So if the U.S. government were to default, they would have to say, we're going to default on foreigners. We're not going to pay the interest to foreigners, but we're going to pay the interest to our own institutions, to our own state pension funds and so forth. Otherwise, if they default, their underfunded liabilities will increase rapidly.
Yeah.
So I think the default by not paying is not an immediate option for the U.S. government. They'll print money. It's much easier.
Well,
just pay people in a depreciating currency.
Well, it raises two questions. One is that what do they do if interest rates begin to rise and it's much harder to finance these $1 trillion-plus deficits? In fact, if interest rates go up, just the increased interest cost could up the ante and make them $2 trillion deficits.
Yeah, sure, absolutely. Say if instead of the 10 years notes selling at the yield of 1.7%, we went to 4%, the government would have an interest burden that would essentially more than double. And looking at the deficits, and I believe that irrespective whether Mr. Obama or Mr. Romney is elected, the deficits will stay here or even go up. But you see, where I disagree with Prechter is this. How do you protect yourself in a disaster scenario? If I look at Germany over the last 100 years, they had World War I, they had the hyperinflation World War II, and owners of equities didn't do particularly well, but they are still owners of equities. The people that lost everything are the cash holders and the bond holders. They lost it 3 times. So in a disaster scenario, how do you protect yourself? In my view, you own some farmland, you own some properties. It's not likely that everybody will lose his property in the U.S. if it's well-financed or 100% financed. And I would own some equities, and I would avoid sovereign bonds.
Yeah, I mean, Prechter agrees with us that the bondholders will lose, but because of default, not inflation. He thinks that the way you protect yourself is you stuff dollar bills in your mattress, because those are the ones that are going to have value. But you raise a very interesting...
But I think before they will have some value, they could lose another 99% of their value. The purchasing power of the U.S. dollar has gone down by 98% since the introduction of the Federal Reserve. And it took more than 100 years for this to happen. The next 99% loss in the purchasing power of the dollar could happen in 10 years' time. You don't know.
Less.
So I think to put your millions all in cash under the mattress is a huge risk, a huge risk.
I know, because all you have is a piece of paper.
That's precisely the point. If that is the case, if that is the view, then I would rather hold my cash all in gold and silver.
I agree with that. But you raised an interesting point that I want to circle back to. And I've mentioned this before, that the U.S. government could strategically default on the debt held by foreigners, yet honor its commitments on the debt held by Americans. But what do you think, I'm just speculating, what do you think would happen if we did that globally? I mean, could the dollar still be the world's reserve currency, or would there be a run on the dollar? Would it be impossible for the U.S. to ever borrow from abroad again? And what would happen to our ability to finance our trade deficit?
Well, I think you underestimate the intelligence of people, because like the Greeks, they have defaulted numerous times and they were still able to borrow money from abroad, not from people who think anything, but from central bankers, like the ones at the ECB.
So you're saying that if the U.S. defaults, that we're still going to be able to get foreigners to loan us more money, even though we've defaulted on everything they've loaned us in the past?
Well, it will take time, but like Argentina, they defaulted several times, and each time foreigners came back.
Well,
there's a price
there's
for
a
money.
Gap, though. There's generally a gap.
Yes,
between that. It's
all
it's
I'm
not
saying
seamless.
is, I think if the U.S. defaulted on its bonds and notes and bills that are held by foreigners, I think the Chinese would then confiscate American holdings in China. And then you would go into a massive trade war that would trigger possibly military interventions, or that's why I'm saying we will eventually have a complete collapse of the system. But it's of no use to an investor to know that there will be a complete collapse of the system unless he knows what to do. And I am an advocate. Don't hold cash. I think this is a high-risk proposition.
I'm on board with you 100%.
Maybe you hold cash for 3 months and the dollar strengthens and the markets go down. But before the U.S. government will default, they'll print and print and print.
Although if you're going to hold cash, I mean, there are other currencies that you can choose from. If you want to hold the paper currency, there are currencies that I think will lose a lot less value than the dollar.
But I just want to mention in this respect, if the U.S. prints an unlimited quantity of money and lets the dollar depreciate against other currencies, it kind of forces the other central banks to do the same.
If they're stupid.
Yes, but don't overestimate their intelligence. They'll do the same, partly under the pressure of their industries that then become uncompetitive. And so the other currencies also depreciate. Maybe some more, maybe some less. The Japanese have been the most disciplined until now, but that may be
remember,
changing.
if the dollar tanks against all currencies, then those countries don't become less competitive because their currencies are maintaining their relationships with one another. It's just the dollar that's tanking.
I basically agree with you, but each time the Swiss franc was strong, the elite, the entrepreneurs went to the government and said, we can't export anymore because the Swiss franc is so strong. Then the tourist industry comes in. We have no tourists because the Swiss franc is so strong. There's a tremendous pressure on the central banks then to also ease, and this has happened to a large extent. But if you want paper currencies, then I would suggest that probably the Singapore dollar is quite a good currency to start with, and the Asian currencies anyway. But I'd like to add one more point. If the dollar depreciates against other currencies as much as you think it will happen and as much as Prechter thinks it will happen, then you ought to own gold.
Yeah. Well, even Prechter says don't sell your gold.
Well, he's been bearish about gold now for the last 20 years, and his original prediction was $200. I don't want to say anything negative about anyone, but basically he got his gold call completely wrong.
It's amazing, too, that the Swiss government doesn't look at the strong franc as a blessing for Swiss citizens who want to enjoy greater purchasing power.
Yes.
And what about their financial industry? Think of all the people who want to use Swiss banks. A strong Swiss currency makes a Swiss bank account that much more desirable.
There's only a very small portion of export industry that is affected by a strong Swiss franc. Here I have a watch. I don't know, I was given this watch, but it costs, say, between $10,000 and $20,000. The production cost in Switzerland is maximum $700. The rest is marketing. The workers, they are maximum $300. The rest is material. So whether the Swiss franc goes up or down, it hasn't any impact on the profitability of the Swiss
and
Swiss
a strong Swiss franc will keep their capital costs down. It will keep their raw material costs down.
Sure.
I want to ask you one quick question because the segment is coming to an end. But you mentioned, so if the U.S. does default, on the foreign portion of its debt. Do you think S&P or Moody's will actually downgrade us, or will we still be AAA?
The point about the rating agencies is that they are looking backward. They don't look forward. And Mike Milken always said, because I used to work at Drexel Burnham, that the rating agencies are pretty much useless. They're very good companies. They have no rating, but they have cash flow and they have the ability to pay the interest. And the U.S., if it were a corporation, it would be a junk bond.
Well,
like Greece, in that category.
And if we do default, though, they have to downgrade us to junk. They can't pretend that we have a AAA credit rating when we've already defaulted on our debt.
Well, if you default, then the credit rating will improve because on the remaining debt...
but we'll just default again.
Yeah,
especially if you're foreign.
But this is the point, that paper money is an invention that tempts every government to spend, and especially when interest rates are at zero, the government actually has the ability to spend a lot more.
Yeah.
This is one of the unintended consequences of Mr. Bernanke's monetary policies.
Yeah, well, look, Mark, really appreciate the time to chat.